Recording it now. Welcome everybody to this week's market review webinar. Hope we are all well. Although we did have a good week on the markets last week, we had a little bit of a pullback on Friday. So markets took a little bit of pips back from us, but it still finished up over 200 pips for the week. So that was all good, and we'll be looking to carry it forward this week. So first of all, just for the people that are new on here, what I tend to do is I will go through the news for the week in terms of what's happening, what to look out for, what's gone on in the world, and then I will look at the charts and give you some positions that I've lined up for the week and what I'm waiting for to see to get into some certain positions and why things may have made some moves. Also, the floor will be over to you guys to give me pairs that you want me to have a look at. So something that you might have analysed this weekend and thought, that looks a bit tasty, let me get Charlie's view on it. Then you can also put that in the chat as well, and I will run through them, not a problem. So, first of all, the news for the week, which is on the economic calendar. So it might be a little bit quieter overnight due to an Aussie bank holiday, and also tomorrow morning we have bank holidays in Germany, France and Switzerland, and I'm probably presuming the rest of Europe. So it's only really going to be the London session open, so it might be a bit quieter tomorrow morning than usual. But we do have obviously some news coming out overnight that will cause some movements. So first of all, it's a Chinese trade balance. Although it says medium impact, it does normally have a bit of a bigger impact on the Australian dollar. So they're expecting a good surplus in of 136 billion on their trade. So 136 billion meaning they export 136 billion more goods than what they actually import, which is very instrumental to the Chinese economy, and that has a knock-on effect to the Australian dollar and a little bit of one on the New Zealand dollar as well. I don't normally enter trades on Sunday night, so we'll see how that plays out and see where the markets are in the morning. Then the only real bit of news tomorrow is pound GDP, which is the monthly data, and something to be a bit alarming about, which could start to happen over the next few months, is if we look here, we can see last month's data, we can see that there was a minus figure. So that means that the industry got smaller, or the economy got smaller within not last month, April month. And now they're expecting another minus figure. So if they do come out 2 monthly data as minus, then it's highly likely that we're going to finish the quarter minus. And if we finish the quarter minus and then have another minus quarter, the next quarter, sorry if I'm babbling on a bit, then that will technically mean that we're in a recession. So why do you think, I'm not going to ask that question. So one of the reasons why the economies tend to shrunk, so when the data comes out in May, it's for April. So when the data comes out in June, it's actually for May. So what tended to happen here back in March, April, well, February, March, was a lot of companies started stockpiling before what they thought was the Brexit day, which is going to be the 29th of March. So that's obviously caused the increase in GDP. And because a lot of companies stockpiled, it was more than likely the next couple of months we're going to see a bit smaller data. So it could only be a short-term pinch just off companies still holding on to their stockpiles that it took back in February and March. But we'll see how it plays out. They're expecting it to go down again. If it goes down further than what expected, then could actually mean a bit of a bad collision for bad start for the pound for the week, if anything. Reason why is because people will be starting to fear that the pound could be going into, or the UK could be going into some sort of recession. So people will try and price that in early as quick as possible. So we'll go through some pound pairs anyway on the charts, but this data could shape up how the pound starts off at the start of the week. Doesn't normally have huge effects, but obviously, what else do we have starting off in the UK this week? Can anyone tell me what bit of news happening in the UK this week? It's been all over the media last week, this weekend. So what happened what happened on Friday? Someone left their position. Correct, it is government related. Let's get in a bit more detail. What about the government? Spot on, Warren. So Theresa May left her position. Spot on, Nilesh. So she actually formally resigned as Prime Minister, or resigned as the Conservative leader on Friday. And now what's happening is a new leadership contest. So a new leadership contest. We did actually have about 13 of them put their hats in the ring. It has been whittled down by a couple at the moment. So it should be interesting because we're getting a lot of them talking about their plans if they become Prime Minister, what they would do. We've even had some confessing to taking drugs 20 years ago, which I thought was very relevant. But like Michael Gove, that seems to have massively backfired on him because a lot of people have kind of moved away from supporting him. And one thing that is particular is that the ERG, known as the European Research Group, so the hard Brexiteers within the Conservative Party, they've formally given their backing to Boris Johnson to be Prime Minister. So they're going to be backing him, which I think there's roughly around 86 of them in the ERG, or about 80 of them in the ERG. So that's quite a lot of support out of 350 MPs. So basically, Boris Johnson is sure on to get into the last two. So as I've recapped over last week, if Boris Johnson does get into the last two, it's more than likely that he's going to win, because what happens when the final two get to it, then all the Conservative members then start the vote, and the Conservative members are strongly for Boris Johnson, or the majority of them are strongly for Boris Johnson becoming the next leader of the Conservative Party, meaning Boris Johnson will be the next Prime Minister of this country. Something that you probably wouldn't have thought you'd be saying 2-3 years ago, especially when he was in London Mayor and he was flying over on that was zip wire, wasn't he, at the start of the London Olympics. You know, thought he would have been the next Prime Minister, but it looks like he could well be. So Boris Johnson is actually quite hardline. He's quite happy to leave without a deal, but Angela Merkel did come out and say last week that she was happy for the EU to open up negotiations again with the UK if they had a new Prime Minister, to basically arrange a new deal, as long as there was issues around the Irish border sorted. Yeah, May's finally gone, yeah. So you're going to get a lot of backstabbing in-house in the Conservative Party, and it's not really going to cause much certainty around it, because a lot of people who are actually going to be backstabbing each other are all within the current cabinet at the moment. So it's unlikely if Boris Johnson did win that most of them would be left in the cabinet, but we're just going to have a lot of short-term turbulence in regards to that. So we shall see how that unfolds as well, because that's starting tomorrow. So nothing really else to come out tomorrow. Pretty dead and boring. Pound does have a bit again on Tuesday morning in regards to average earnings. So average earnings has been at a record high, high for the last 12 years. And we're starting to see it tick down a little bit. The jobs market's pretty full. We're getting there. 3.8% is the unemployment rate, which again, if we look back on historical data, we can see that it hasn't been down here in God knows how long. So just looking back at historical data, we're in a massive downtrend. So the jobs market is something that's of huge strength at the moment. So as you can see, the last 3 years, we've been ticking down. Even if we go down further, we can see that we haven't been at levels like this. Well, it's for about 52 years. So we haven't got that much data to go back to. But as you can see, it is a massive strong point within the, why has this changed? Sorry. Just taking back to December for some reason. There we go. So it is normally something that comes out quite strong. Average earnings is doing fine at the moment because it is above the rate of inflation. Inflation is only running at about 1.8% at the moment. So we're well above that, which the Bank of England will be happy with. So it does show signs of a resilient and strong economy. Then again, nothing else happening for the rest of the day, pretty much. Only some small producer production inflation report, which doesn't really matter. Then we come over to USD, CPI inflation. So CPI, so it's inflation, and core inflation. So these two are obviously the ones that are most watched by the Federal Reserve at the moment. They do have inflation running just under their 2% target at the moment as well, which they'd obviously want to see it push up towards 2%. There's been a lot of talk on something in regards to the Federal Reserve within the last few days. Can anyone tell me what it is? I did put a hint. I did put a little article in the groups earlier. So if you read it, you might well know the answer to this. Correct. So what's being spoken about with the US Fed Reserve? What are they potentially maybe doing for the rest of the year? Yeah, exactly. So the dollar's started to heavily sell off, and we'll go through the charts shortly and we'll see it. So just a quick look at the dollar index. We can see this happen just over a bit of last week or so. So the US Federal Reserve are getting a bit worried and a bit nervous about the economy. With a lot of these trade tensions as well, people are starting to expect the dollar to pop, basically, in terms of their economy, because their economy was running so strong for quite a period of time. They feel that they might be coming to maximum employment. So maximum employment basically meaning that, right, they can't actually do any more rate hikes. They're getting a bit worried about the outlook of the economy because of what's going on at the moment. So they actually might start cutting interest rates. So the US Federal Reserve in the last 2.5 years have conducted no fewer than 8 interest rate rises, which is huge amount of interest rate rises, all by 25 basis points, which the rate is currently at 2.5%. So what economists are starting to price in at the moment is they're looking at 2 cuts of 0.5% before the end of the year. So they're looking at about a 1% cut within the interest rates. That would very much suit Donald Trump. So you know what we've been talking about over the last while. Donald Trump has wanted a weaker dollar. And I've also read another article this afternoon that is the Federal Reserve are starting to come to terms with what Donald Trump wants. So Donald Trump wants a weaker dollar because he wants to compete with Europe, he wants to compete with China in regards to trade. So a lot of countries, say the more sort of developing countries, don't buy many goods and services off the USA because the dollar is too strong. So it costs them a lot of money within their local currency in order to buy from the dollar. Instead, they end up going to China where they get stuff for half the price or a third of the price of what the USA sell it for. So the USA want to start competing in that market because they have a large trade deficit. And one way of getting the currency to weaken will be cutting interest rates. And especially with Donald Trump kicked off last week with Mexico even threatening tariffs on them, that really started pushing the dollar down, really started the sort of the ball rolling with it, should we say, because what happened is that Mexico are neighbours, Mexico are big trading partners with the USA. So as well as them, China, Europe, all of them are just adding up. So that's why we saw a big push on gold last week, and obviously a sell off within the dollar, along with the NFP scores that come out on Friday, which didn't set the world on fire. So that also caused a bit of a dollar sell off in the afternoon, Friday afternoon. So we're coming up to some good support levels on the US dollar, so we'll go through them and in a moment and see on the charts what it looks like. But I just think it's a bit of overreaction. I can't see, personally, I've been saying for quite a few months of people that have been on here that I think they've done their interest rates a bit too fast. They're quite excessive with it in terms of how many they've done over a short period of time. So now they're looking at thinking, oh, we've made a little bit of a mistake in that. So they're cutting back. And they're probably going to come back down to some sort of reasonable level. Because at the moment, you've got the Australian Central Bank cutting rates. They did last week. You've got the New Zealand Central Bank last month. They cut rates. You've got the ECB talking about it. And you've also got the Swiss and the Japanese yen already running at negative rates. So for them to be at 2.5% and no other economy is kind of anywhere near that, apart from probably CAD's the closest. it was quite a bit out of the ordinary, if anything. So Trump might finally get his wish with the Federal Reserve and for them to cut rates. So we'll see how that unfolds. I can't see them cutting rates by 1% by the end of the year. Personally, I'll probably see maybe 1 or 2 rate cuts of 25 basis points, which is 0.25%. But that's roughly about it. The dollar economy, in terms of the data that it's producing, it's still producing fairly relatively good data. So the GDP is still well ahead of everyone else within the other currencies that we trade. Jobs market's still really good, even though the NFP numbers on Friday was just still added over 70,000 jobs to the economy for the month. And inflation's running there or there about target. So really and truly, and overall, we haven't really started to see a bit of a dump within data yet. So it makes it quite, the Federal Reserve are normally ones that react after the data's been given, but now it seems to be making noise about rate cuts. So it means to be like they're being quite proactive about it, which isn't something that they've really ever done before. Then on to Thursday, you have the Aussie unemployment overnight. So that had a bit of a jump, I think, last month. Yeah, from 5% up to 5.2. They are expecting it to come down to 5.1%. So if that happens, or if it comes down less than that, then you can see a little bit of strengthening within the Oz. But I'd be aware of buying the Aussie long term at the moment, is because obviously they're looking at doing another interest rate cut, probably in August. So they've done one last week, and what's his name? Oh, his name's gone out of my head. The chairman of it. The chairman of the Aussie, I can't remember his name, but he spoke about, don't be surprised if there's another one come August, basically. So yeah, they're pretty much looking at going down to 1% on their interest rates. This one, the Swiss, they probably won't be happy with strengthening their economy, the strengthening of their currency, especially against the dollar over the last course of the week. I wouldn't be surprised to see them come out bearish as well. Mostly central banks at the moment are bearish. So they like it when US swifts up around these sort of levels at least. Now it's shot back down quite quick. Probably won't be surprised to hear them saying something to make it go up. We'll kind of see how that one plays out, where the markets are by the time that actually happens. Because we don't want to see a big dovish move put in before the news happens, but it doesn't get wild like other central banks' announcements. So the Swiss and the yen are relatively muted compared to other ones. You have some OPEC meetings this week, so this should be interesting, because obviously if we look at oil and what's happened to oil over the last while, it's come back down. So since here, back in the last year, flew down here. Now it's come up and sharply come back down. So what happened at the end of last week was Russia and Saudi Arabia have started talking about extending cuts, taking action back in the market, because it did fall from basically 60 down to around 51 within the space of a week. So that's quite a volatile move for the oil market compared to what it usually is. And that doesn't help with price stability, if anything. So what's tending to happen again, you're starting to carry on getting a build up within stockpiles, showing that at the moment there's less demand for it. And because there's less demand, price has gone down. So if they tend to extend cuts further and stop producing as much, then obviously we should see they say the market rebalancing itself, but it's basically just pushing the price up. So they don't like the price being too low. Hello there. Late one again. So yeah, we'll see what happens with that. I can see them extending their cuts, because obviously they don't like prices down in the 50s. They really want to see them around the 60s plus. And finally, Friday, you just got core retail sales for the USD. We're expecting quite a bit of an upturn from last month's results. But again, it's very hard to tell what's going to happen and come out, basically what's going to happen in that data for it to come out in. So again, it's more of a, we'll see where the technicals are with the dollar around that sort of time. So, on to the charts. So just before I start, if anyone wants me to monitor, go through any pairs for them, just put them in the chat now and I will add them to my list. Someone's put 5. Another person's put 4. They're lucky some of them are on my list anyway, so that's good. Anyone else have any other pairs? Let me pick some people. Again, to give me pairs. Alex, Carmen, Louis, Tom. Give us all the pair that you want me to go through. I just highlighted some people that are on there. Give us a pair that you want us to go through. Sweet. Sweet. Well, everyone loves a bit of EG this week. Euro pound. Right, so as always, I'll start off with the dollar index and we talk about that. Yeah, I always do dollar index, EU and gold. It's my first 3 every week. So as we can see, looking back, we are still within this massive channel. We did have a little bit of support there that we was waiting to see if we got a bounce on. Although we got that candle, it just absolutely crapped it the next 2 days. So where I'm looking for a bounce within the dollar is just literally where we can see it's support, and now we're heading back down to see if we can touch that support level. So this is at quite a critical level because we're at the monthly S2 level. We're at the 78.6 fib from this downward move, from this upward move from the bottom there, and we're at the bottom of this channel. So this is going to be quite an interesting area to see price action, to see what happens. So I don't necessarily trade this, no. I just use this as a guide to help me with gold and EU to follow positions on that. So we're going to see what happens once it gets to here. I'm expecting probably a bit more of a push down before we get some movement upwards. Because if we look on the 4 hourly, we are starting to get a little bit of divergence. We've reached a low here, but we've made a lower low there. So we are still going downwards. So we're just going to see whether we can touch this level and get some buyers come into the market and create some divergence with some strong price action. So RSI divergence is where we're making a higher low here, but we're making lower lows still on the charts. So we're going to see how that one plays out, and that will kind of give me an indication as to whether this will start to go upwards, get some strong rejection here. So we could well dip below and obviously reject and close back above. The aggressiveness of these candles does show me that we're probably going to head down maybe over the next couple of days still, maybe a bit slower, and then turn around and have a bit more of what we call a midweek reversal. But that's how it looks technically. Fundamentally, could be another story. But we've just got to go on to the charts of what we're looking at technically at the moment. If it does crash back through here, then we'll wait for a retest, and then obviously we're going to look to go further down. But this is quite a big support area that we're looking at. If it does go down, we're going to be looking at coming down to at least a 95 level again, because we're going to be trading outside of this massive channel that we've been in for months and months and months. I've been in this channel for now about a year. Yeah, about a year I've been in this channel. So yeah, it could be in free fall. So you'd look at 95 and then probably further below you'd look at 93.80, around that sort of level where I've got this key level here. So if I'm looking for the dollar index to go down a little bit more and bounce, it's pretty much the same going to happen with Euro USD. We're going to see this rise up a bit and then maybe come back down. So right, let's go on to the weekly first of all. So the weekly, as we can see, as we can't see because everything's in the way. Let's get rid of this fib as well. And get rid of this for the moment. So the weekly, as we can see, finished very, very bullish. Very bullish. We may have a little more of a bit of a push up. There's 2 areas that I'm kind of looking at in terms of shorting. So if we go down to the daily, it will become a bit more clear. So what we was looking for is maybe just a strong break outside, come back, retest before maybe upwards. But we do have a bit of sticking points. Where have we got them? I didn't mark up, but they're gone. So we've now broken out of this high. Now this is basically made a higher high. So I think back up to at least, sorry guys, about 113.90. My lines have gone for some reason. So where I was looking at is around roughly around this sort of level, 113.80. And if that doesn't come through, then maybe looking at 114.50. So two kind of areas that we're looking to sell at. So the daily hasn't kind of reached overbought territory at the moment, but we'll go into the 4 hourly because the 4 hourly does look a bit more interesting. So ideally, I did want to see a pullback, which we did get a retest of this trend line on Friday, but it was basically just pushed by NFP, by some bad NFP. So I didn't really take this breakout into account because I wanted to see a clear breakout and then a pullback. But as I'm saying, that the dollar index might go lower before pushing up, this might go higher before pushing down. So roughly looking at around 113.80-ish. Kind of get in on a short. If not, then I'll be looking at 114.15 if this just breaks through. I'd want to see a nice 4 hour, say, pin bar rejection off of this high before maybe going back in on it. So just by looking at the 4 hour, we can see that now we're in huge overbought territory. We have pushed up, we created some divergence, but I'm just probably going to expect that one more push up as well, just to get rid of all the sellers that have come into the markets around these prices before maybe moving down. So a bit more manipulation, take people out of markets, especially if this dollar situation dies down as well. Trade tariffs, then it could be fairly interesting. But sorry, that's where we have another sort of trend line just coming down, just touching around 114.40, 114.50. So we've got a bit more confidence there on the weekly as to why we are entering that. So my target would only be here. So if we do actually end up shorting from here, my target would only be back on a retest of that around 112.60. Just to try and not be selfish, just take what the markets are giving us. Because the one thing is we've taken out these highs now, and we've effectively made a higher high. So it could go up, go a bit higher, come back down, make a higher low before maybe moving up higher. But we'll come to that when that happens. But this is just over the course of the next week or so. What do you think may happen? So ideally, I want to see that, and then here. If we do miss the short and it comes down, then we'll just wait for the long to go back upwards. So two options there in terms of what will happen. So gold as well. So with Donald Trump talking on, over the weekend, funny enough, when the markets are closed, the US and Mexico come to a trade agreement. That was one of the reasons why gold was bought up quite heavily, because obviously they went to a war with Mexico in terms of people coming over the border, so they threatened to slap tariffs on goods, etc. Also, Donald Trump said he was very confident of making a deal with China still, so that could cause the stocks to rally a bit. And the stocks last week actually had a very strong week, and we know lately that obviously when the stocks have been going down, gold's been going up. So if we look at the stocks last week, pretty bullish, but so was gold. So it looks like people started buying into gold again, obviously once people started to price in more than one rate cut for the US dollar. So we've got to see how they play out over this week, because this still looks like it's going to go up. It's a very bullish candle. off of some good support level here. A very strong bullish candle. So we could be going back up to at least reach these highs. And with the strength of that candle, it does look fairly likely. So the gold and stocks correlation could be coming to a bit of a halt, should we say. So just be careful of that, because I know people are looking at selling gold if stocks are going up. But obviously last week we had them both go up. So just be aware of that correlation there. Just by looking at gold, you can obviously see that. 1 second, let me sort this out. We come up to some very strong resistance last week. So we've seen multiple times this level get rejected. So again, this could actually be not a bad area if we get a retest and rejection back off the 1346 level to see it maybe go downwards. But we do want to see some good price action. So although we've had a strong bullish run there, these candles are starting to slow down a little bit. So we're starting to get a bit of wicks. Not a strong candle there. And obviously this one finished about halfway up at a high. We are heavily overbought over here. So at 75 level on the daily RSI. So we might see a little bit of a drop off. But again, we are bullish on this now. So because we've broken out of these highs. So we've made a higher high. So if I did take it short, then I'd roughly be looking at around this sort of level, back to 13, just before 1300, so around 1305. And that's only if things start to settle down. You know, that can disappear within one tweet from Mr. Trump. Can send out a tweet that can send the stuff sideways. But we do have a long-term bullish trend line, as we can see. So if we're going to come down, then roughly we're going to be only looking to come down and get out before that level. So maybe here as the first target. Or if you did want to hold it a bit longer, be a bit more ambitious, then you can come back down to here. But I think I'd be happy with just that move and then evaluating to see where the market is. So for it to make a higher low before maybe moving back upwards, which it could well do. So Trump and President Xi will be meeting at the G20 meeting at the end of the month. That's bang on the 618 fib, so that wouldn't be too much of a bad target area. They are meeting at the end of the month, so all eyes may be on what happens in that, if they make any progress. One of the trade negotiators did come out today and said that he was worried about China walking away from a trade deal. So it's still up in the air of what's going to happen. Businesses haven't really seen the impact, and there's been no real impact on the economies lately. And even though these tariffs have been running for nearly a year now, they started on July the 1st last year, where he started tariffs on steel within China, Canada, Europe, etc. So we haven't really seen anything change with any sort of earnings within businesses yet. So we'll see if we get another touch at this level, because that would be an ideal selling place, because that's that strong resistance. And we'll monitor it from there to see whether we can get in on any shorts. So if we did take a short from up here, this would be the first target, around 1325, because it's been used as good resistance beforehand, good support here. Good resistance already there. So we'll see how that goes. That'll be a first target, with this one ultimately being a second target. Anyone have any other different analysis? Are they fine with that? We've got the same. So short-term, short if the markets react well to the news over the weekend. But over the longer term, with central banks cutting interest rates, especially the Federal Reserve, we can see it maybe moving up for. So if we get in and it looks good, it could be a few days. So if we do get in and it looks good, then it could be a few days that we might ride it down. But what we've got to remember is, if we're shorting this, what type of trade is it? Is it a trading with a trend, or is it a counter trend trade? Yeah, so we'll be counter trend trading. So that's where we just got to keep an eye on it a bit more, because we're going against the trends. And so we may get out, depending on how many pips we make, how if anything happens within the markets. We are going against the trend. So any counter trend trades are normally kept a bit shorter, unless something dramatically happens with China. And if we're in this short and then China and US shake hands on a trade deal, then yeah, we'll be opening up our TP and holding it. So we've got a couple of options there. So something that we will be looking to get in, and I set a sell limit for this the other day and it didn't actually trigger, which was a bit annoying. So I'm going to be looking at getting into US CAD. So we did initially have a retest of this trend line to get back in on after this candle. So I wasn't actually looking for much of a pullback. So if you knew me on this, I'm literally looking for such a minimal pullback that it didn't even get that and it just carried on going down. So this candle does look quite strong, which is a little bit worrying, but we have landed at some support here. So I'm just going to be looking on maybe a bit more of a smaller pullback in order to get in again on the markets. So if I was to find some previous support, so which would be $133.80, we're miles away from that, we're not going to get that. Or even if we find some support there, we've got 133.20, say. So we might only just get a pullback there. Ideally, we do want to see a retest of this trend line, but the aggressiveness of this candle is making me think that we're not going to pull back near on 130 pips on US CAD before dropping down. So we're going to see if we can get in way before that to try and ride this down a bit more. Because if we look now, what we've seen, this has been in a massive channel for ages, and we finally had a strong, clear break out of it. So we had a strong, clear break to the downside. So we're just going to be looking for pullbacks within two areas, which is here and here, to find if we can see previous support will now act as resistance to take it down. So if we do get in, then the minus 21 FIB, minus 27 FIB will be my first target. So it's 131.92, so roughly around 132 would be your first target. But over the longer term, we could probably see it going down further, at least 131. So we'll see what levels that we can kind of get in on. No, US CAD and gold aren't correlated. Right, sorry, it's a question that you asked. It's fine. You can ask questions. That's what I'm here for. But basically, if gold goes up, US dollar will weaken. So theoretically, yeah, but it's not a direct correlation. Because if oil starts shitting it as well, then this could just consolidate. So we'll see what levels that these get back to for a short, at least down to this level that we'll be looking at. If hopefully we can get a nice pullback to 133.80 in order to execute a short to get in the market at. So that's the ideal selling price we want to see get in, because it hopefully retest this trend line as well. And then you can see here previous support, hopefully act as resistance, and we'll go from there. But we just got to be wary, because I'd like to see a bit more of a wick on this candle. We just haven't had it. It literally closed right at the bottom. So without triggering us in, it went down and hit our TP, which is frustrating. But I was being a bit picky with my prices. US Swiss is quite similar. Again, broken out We only had a couple of bounces here. We went down for the third one, but it seems that this is now acting as resistance. So again, I just want to see us pull up, retest this, a clear breakdown, retest this at a better level before shorting downwards. So pretty similar in regards to the analysis on both. Ideally, I would like to see it come up a bit higher and get a better price, but this is going to be the first area that we're going to look at for a short. I'm going to retest this trend line, 50% fib, which should be okay. So dollar, as you can see here, the trend is bearish because look, we've made a low, lower high, lower low, lower high, lower low. So we're going to make a lower high before maybe selling and going down a bit further. So these are around 97.50. So if we can get in here, which would be fantastic, then it'd be a good sort of move downwards. I just want to see this come up because we're getting into oversold territory now on the daily. So I don't necessarily like just jumping in and shorting. What we might see is, especially that candle there, you might actually see it do this. Go down a bit further, then come up. And maybe go back down. Just something like that. But I am waiting for this sort of level to be hit in regards to shorting it. But if we do get back down to this level, then we might even look at longing it back up to this trend line. But I'm not going to long it from here up to there just yet. I'd rather wait for the short. So something interesting that's happening on some of the yen pairs. As we can see, we're having some nice inverted head and shoulders forming. So we can see here with euro yen. So euro yen has definitely got some room to the upside. So where we can see we've had, so just where we had this move, we've got a counter trend line that has been broken and now retested. We was rejected away from the minus 27 fib, as we can see there. So now we've had clear rejection here over the course of last week. This does look like we do have some more room to go upwards, which I think we will. So the 4 hour looks better showing this. So basically what we're going to look for is basically a retest of support, well, resistance now turned into support. See if we can get in on a long opportunity on this pair. So we've had it broken, closed just above it, it's retested, moved up. So I'm just going to see if we can get a little move down, get a bit picky with prices, then to obviously buy upwards. And because the stock, so when we looked at the stock weekly candles earlier, they do look bullish. That means euro yen could also go bullish. So good price action strategy there. One thing that I am looking for, go back to it. One thing I am looking for a correction, a small correction, is that we are actually currently sitting quite high on here. So I'm looking for a small move downwards, just like rubbish candles like these. As we can see, very weak candles pulling back. Hopefully get some of them. Use this as support before we literally look to buy upwards. Where am I going to be looking at potentially buying upwards to? So first level, if we can get in around 122.20, this level will be pretty strong. It should 50% fib from the top of this move, but also which is 123.70. But also you can see just by looking left, support. So it's acted as resistance here. So you'd want to get out probably just a tiny bit before that level. We do still have that gap over there on the left, you're correct. But again, like a lot of people, so many people that went long for that gap to close straight away. And obviously when you get gaps like these, they happen for a reason. You don't necessarily get a gap open up, what's that price? 50 pips below if nothing's happened within the market. Well, something's happened to cause that to go on. So it hasn't closed. Look, gaps of no sort of deadline as to when they will close. But I'm just going to play the charts on what I can see as support and resistance. And without being selfish, this will be our target level. So it'll still be a good amount of pips if we can get in and out at the prices that we wanted. Hopefully you can get a little bit of a dip below hand, a bit further down to get a bit of a better price for moving upwards. But that's where I'm going to be looking at playing it over the next course of the week. So that'd be a sort of target level. Did anyone find this one on EJ? Did anyone see this? I did go on about Head and Shoulders quite a lot. There's also another one as well. Oops, I just typed something in the chat box. It's pretty much got another one here as well. My mouse was playing up, so it didn't make me do these correctly. So again, I'm waiting for a bit of a pullback within CAD yen. Because again, we still got gaps up here that we haven't filled. But what we're hopefully going to get is a retest back down to here around the 80 mark, then to look to buy it up to at least 82.30, or even maybe 82 I'd say. So if we can get that pullback, start using this resistance as support, so this neckline back in this blue supply zone that I've got as well, back to around that sort of area. So there's a lot of confluence around that area. Then we'll look to buy it upwards. So especially with what commodity is mostly affects the CAD, because we look at that chart as well. So the price of what affects the CAD? Yep, spot on, oil. So we'll go over to oil and we'll have a look at this. So looking at the daily, we can see that it started rejection off the 618 fib, so from this bottom move upwards, and 2 days got rejected, and I don't know why that just happened. So what I'm looking at on the 4 hourly now to look at our positions is we've had pretty much what we call a lot of consolidation around here. I wouldn't necessarily call it a double bottom, but we roughly closed around here, which is the same as here. We've broken above this sort of resistance now. So I'm just looking at seeing if we can get a pullback to at least this area, this neckline here, before maybe going upwards, or we might pull back to this support line a bit further down, which is here, which we can see that to the support beforehand in order for us to go long. So I do believe this will go long this week because of what Saudi and Russia were talking about at the back end of last week in regards to sorting out the market again. Because again, everywhere is getting a good build up of stocks, which obviously the market don't want, because every time there's a big build up of stocks, then you obviously get a fall in price, because that's just natural supply and demand. So 2 levels here, looking to buy. So just if we look back as to why I'm probably going to be looking to go into these levels, is if you can see previous support there is previous support up here as well, which we could probably place it there, but it's being very ambitious. Being very ambitious indeed. 55 is quite a strong support level, support and resistance level. Again, this got quite heavily oversold here. So we're just going to be looking for it to go up to as far as here. As you can see, good resistance here. There's one reason I don't like holding oil for long, is because the swap fees absolutely kill me if I'm long in oil. Short in oil is all right, But long in oil is a bugger. So these are normally day trades that I do take in oil. I got charged one swap fee before. It's not even on my normal broker that I use, another one. And I was charged 360 quid for a night, one night. So yeah, it's quite excessive. So I don't necessarily like holding on to them for too long, especially Wednesdays. Wednesdays are triple swap fees. So fees are a little bit higher on Wednesdays. But 55 would be the first level that we'd look at as a target. If we can get in around 52.80, that may be the first trade, then let it pull back and then maybe go up higher. But I'd ideally want to be out of it before Thursday's meeting, the OPEC meeting. Just because we don't know necessarily, although Russia and Saudi want to increase cuts, we don't know whether the other countries will say yes, basically. So if they don't say yes, then it could even fall even further because people will just keep on oversupplying the markets. So looking at that one on this, let's see if we can get in a position to take upwards. That makes sense. Anyone got anything different on oil? I'll have a quick drink. Sweet. So, euro pound. This has been absolutely on one. So, as we can see with this, we had this marked up to actually try and get a pullback, but we didn't get that pullback. At the moment, these daily candles look bullish. So it does look like we're going to go a touch higher, which the next level up, I believe we could see is 89.50. So quite a bit of a big zone here. As we can see here, resistance, 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 support area. So it does look like we're going to pretty be inevitable to reach up towards there. The pound's not looking good across the board at the moment, across quite a few number of pairs, which we'll go through and other ones. But yeah, so if you're going to long it, then I wouldn't be looking at longing it for too long because it's hugely overbought. We've created some divergence. So we are probably coming to the end of the move. And it would be time to kind of look for some shorts. The pound is obviously very sensitive at the moment with Brexit, with the political contest now as well. Just people trying to price in as early as possible who's going to be the PM. So, yeah, I wouldn't look at longs. We'll just look for strong evidence of shorts once we get that evidence, once it comes to the party. So that's really, I know someone put Euro CAD. I know they asked me this last week, but the Euro CAD, same choppiness, same crap that we're in, it's just consolidating. I've got no analysis on it. Just if you're gonna get in it, try and buy at support. Once you see rejection, and sell at resistance. Anything I can really say, but that is just choppy as hell. It's been choppy as hell for quite a while now. It's for a few months. So I'd rather just not get in it. I'd rather just leave it alone. Euro Oz. So Euro Oz looks like we've formed a bit of a swing. It does look likely that we might be popping back up to these highs. So I'm going to wait to see how we react once we get to these highs in order to look at a short, which is only about 60 pips away. So it's not necessarily that far away. And once we do, if we do get rejection again from these levels, it could be pretty much a double top. And then we can maybe look to short it with this as a first target. So from 162.50-ish, we can maybe look to short it to at least here, which is 160. And should that break, then we'd obviously be looking a bit further down, roughly around this sort of level. It's around 158.80. So this one, if we do get good rejection from here, it could actually be a nice sort of trade that we may hold on to over a period of time. So go down to 4 hourly. Let's make this a bit bigger. So I'm expecting a bit more of a push. Just to do this right from the high. So yeah, I'm going to be monitoring it as it tends to climb up. This would be ideal area, but again, back up would be a 786 fib to see if we can get rejection away from this level to maybe go downwards. So between here and here will be the two levels that we'll be looking at. Hopefully the one higher up. So if we do get good, strong Chinese data overnight, then this could well just drop. And this is a position that I am in at the moment. So Euro New Zealand, again, I think this is got some room to go downwards on it. So we've got a break and retest of the monthly pivot level. Although this was a bit of a weak candle, so it's a little bit concerning, but the pattern in the 4 hours is still valid. I'm still happy with it. So 4 hour head and shoulders. We've basically retested this neckline now. We haven't closed back above it. Hopefully see a bit of a continued move downwards from where we are. We've rejected off that monthly pivot again. So let's see how this one plays out. This still looks a good move to the downside. 168 is my TP at the moment, which is right bang on the 78.6 fib. So especially if the stocks are starting to take a bit of a warm reaction to US cancelling all tariffs against Mexico and potentially against China, then you should continue to see this move downwards as well, because Aussie and New Zealand are helped by the stocks. New Zealand CAD. So on the daily, we can see that we've got a nice sort of descending channel going downwards. We have broken out of it. So because we've broken it, we've not had that daily retest yet. So I'm going to see if we get that retest down to this level, around 87.70, 87.50, to maybe look for a buy position to take it back upwards. I know we set this out to see whether we can get that push up and then downwards. But no, I counted this out, that was last week's one. If it does get to there and rejects off, then yeah, we will be shorting it. But this is the move we want to see happen first of all. So we want to see it come back down to this level, look at taking a buy, and then maybe trading it up to roughly around 90, which is again only a 50% fib. But it does make good pick. It is a bit of a slower mover, so just be careful of that one. Sorry about that, something just come through. So yeah, breakout, retest, and then let's go from there and take it long upwards. Might even go to here. Just depends on how long the move takes. If anything comes out to kind of change it on its course, should we say. And we do know, as from these sort of channels, that these ones that come downwards like these are normally reversal ones. We just wait for that breakout, the retest, wait for this last high. This got clearly broken. We made a higher low, higher high. I'm going to kind of see it roughly around the same low, or maybe a bit of a higher low, and then wait for any rejection to turn around to take us upwards. To roughly there, 50% fib, that'll do me. Not going to be too greedy and try and squeeze every last thing out of the markets. Then again, AusCAD as well, just looking for a bit more of a downside move to maybe look at buying. See if we can get a touch on this monthly S1 support, roughly around this low again, and then maybe look at buying it. But that's why I think we're going to go down. So weekly did finish a bit of a big rejection. So I'd rather have New Zealand CAD over Aussie CAD, if I'm being honest. This one does look a little bit more aggressive in terms of the selling pressure rather than New Zealand was. So this is the sort of area that I'm going to be looking at buying at, around these sort of, around this. So if you look back on the weekly, we do have this at the 786 fib retracement from this move upwards. So this will have a real sort of deep correction coming back down to this level. Got hammer bar last time it come off of it on the weekly. So we'll see if we get a touch of it again, and then some rejection in order to buy it upwards. So where would I take it to? Only roughly around 94, roughly around here, around 93.80-ish. So from 92.30 up to 93.80. I'd be happy with that move. Could go, probably go up higher, maybe up to around here. 94.20. 94.20. So it'll make a higher low and then come up, make a higher high, and we'll go from there. So Euro Swiss, that's today's candle. So today's candles close open quite down. It's only 10 pips, that's fine. So where I was looking at getting in is looking at sort of just the support. We can see that this is a bit of a channel now. Seeing if we can look at buying at some support, which isn't too far down, to maybe coming upwards. As we can see, we've got a descending trend line, has been broken, retested, broke below but come back above, retested it, and now we're just consolidating. I'm expecting a correction on this pair, just because by looking at the daily, we can see how heavily it was sold off over a good period of time. So I'm probably looking for it to come back up to at least 113.20. We can see this acted as resistance here, support here, support here, support here, resistance all here, resistance all here. So it's quite a big bit of a level. And it's bang on the 618 fib from the move downwards. So obviously we was waiting for this to be retested before, this bottom of this triangle, to take it short, but obviously the move just happened and we didn't end up getting in on it. So I'm going to be looking at longing this up to at least 113.20. And again, especially if risk aversion stays away, because we know why Japanese yen and Swiss franc are get bought. And they get bought because they are safe havens. So if any sort of turbulence happens within the world, anything else develops, then obviously we know people tend to jump into them. Obviously we can't enter for another couple of hours, but yeah, we're going to look at getting in on the act on that. Pound USD. So just by looking at it, we've got a strong move down. And as we can see here, we've pretty much created an inverted head and shoulders again. So ideally, if I want to be long in this, we know what we want to see. Again, I probably want to see that happen, break out, close above, come back and retest the neckline before moving upwards. You want to look at there and then there as your targets, depending on how long you want to hold it for. So I'd want to see this pattern broken to be confirmed. We have created some slight divergence on the 4 hourly. So where would we? Let's have a look. I haven't actually marked up this pair yet either. If we did see a break and retest of this, then it could move back down to these lows. So I'd be wary of that one. We've got news first thing tomorrow morning of the pound at 9:30. So being honest, I'll probably wait until then to see how that shapes up, because that'll send it one way or another. And especially if it comes in as bad, you could see it drop down quite a bit. But the daily did finish strong on Friday. That was mostly related down to NFP, but we didn't close back above these highs. So this high, we didn't close above these, which ideally wanted to see to carry on having a big push upwards. But when we're looking at other pound pairs, like I said, it's just looking, oh, blimey, that's open up strong. That's today, isn't it? Yeah. So that was open at 181.90 and it's already down at 181.20. So it does look like we've opened up with a stronger Aussie. So I did want to short this as well, which is a bit of a pain. Where's my analysis on this? Oh, here it is. So on the weekly, as we can see, I was actually looking to short it down to this level here, right at the bottom of this channel. Market's dropped quite a bit already with the Oz. So that's annoying. So yeah, I'm just going to wait to see what happens at around this level. Then, if we might still be able to get in tomorrow, because I weren't looking at getting in tonight. In order to short, because obviously we had a good selling candle there. But just in terms of where my target's going to be, if we do get in short, would be here around 179.50. Or if we miss that, we're going to look at potential buying opportunities at 179.50 at around here. So we'll see what plays out once it gets to this level here. But hopefully we can catch that move down. So there's still a good couple of 100 pips that we can still take. I know it's the same pretty much across the board. Some other pairs as well. Difference between pound and pound CAD is actually it's broken this channel that it was in, as we can see. Strongly broken it. So potentially, all I'm going to look for is a retest of here, this support, at around 170.30. If it gets that high up. So maybe take it back down to these lows here, as we can see quite a bit of support around here. So around 176.50. We can get a retest of these levels here. Let's move down a little bit. So retest it here. So pull back around 100 pips. It's ambitious. But you can still get that in the weekly candles in order to take a short down to around 176.50. And we'll get out around that. These candles do look pretty bearish. We've broken this support now. So even if we touch from around 169.50, I'll be monitoring it. I'm going to put an alert on it to see if we can get in to go further down short to here. Target levels could be there. And that sort of zone. Minus 27 fib and the S1 pivot. But again, it's just about sitting back, waiting, seeing if these things move our way. See if I've got everyone's pairs that I've done. EA, EU, GU, gold, Swiss yen, I do know. Oh, if I look at it there again. So pretty much like most of the pairs that we're looking at with the yen, obviously we're looking at stronger stocks. We can already see here that this candle's open up and it's exploded. So there will be some gaps at 10 o'clock when the market's open, if your broker isn't open already. Yeah, we've already had quite a bit of a move. Already had a 50 pip move upwards on this, which was annoying. So I was looking at taking it long once this broke. If we can get a touch back down at this level, I'd look at buying. But yeah, other than that, looks like we missed this move. But where's it going to be going to? Because of the strength of it, I think we're going to go back above this. So I'd roughly be looking at 110.70. Where do I want to buy out now? Because obviously we've missed a bit of an opportunity. 110.70. Let's see if we can find some support to make up. If we get a retest of this R1 pivot, if we do, then obviously we'll look at buying it. The 4 hourly doesn't show the current candle. It's only the daily that shows where it currently is, as you can see. So if I get a retest back at this level, then we'll buy to take up to 110.70. It looks like all of them are going to be like that. EU, yeah, that's gone up as well. So we'll see how the markets look when we open up at 10 o'clock. So might wait for them to pull back overnight again. CAD yen's gone up. That's flying. It's only 50 pips away from the target I was looking at. So some of the moves are being made, but again, we'll just wait overnight to see what happens. Does anyone have any questions at all? So this week, Aussie up, New Zealand up, dollar, God knows, yen weakening, Swiss weakening, CAD potentially strengthening. I've got this drawn up for CAD Swiss. So again, this is the daily candle, today's. So we do get, again, good area of rejection around here, but just by the look of it, we could break and retest it to move it upwards again, go upwards. So we'll see how this one plays out and how it looks in the morning. Because we're getting some moves already made. At least you can see how the right analysis. If we do get strong rejection here, then obviously we could be going down a bit lower to around this level. So that'd still be around 100, just over 100 pips. So does anyone have any questions to me before I leave it here for this evening? I've gone through everyone's pairs, I believe. So I have covered mine, and there's quite a few positions on the market this week. Let's see if they can pull back and play out overnight. And we'll go from there. Right, all take care. Enjoy the rest of your evenings. And we'll go from there. See you later, all take care. Cheers, mate. Thank you. See you later. Good night to you too.